What is going on, YouTube fam? Wanted to come back with another video, and in this video what we're going to be going over is how to use the Fibonacci retracement. For all of you that do not know, TradingView is our main platform that we use for desktop, and then for mobile we actually use MetaTrader 4. So really I'm doing most of my analysis on TradingView, getting an overall bias on what the market is doing, and I'm actually entering my trades on MetaTrader 4. But without further ado, let's go in. So right here we have this tab. It's right here, the Fib retracement. This is what we're going to be using. So when we use this tool, what we're overall looking for is when we're in a downtrend, we're finding our highest point of resistance and then our lowest point of support. So right here is our highest point of resistance for our range we're in. Then we have the support right here. And the reason as to why I extend it is so I can see what's about to happen in the future. Because I kind of want to know what's going to happen. Is it going to bounce off this level and then go down, or is it going to continue to go up? So really that's why we use this tool. And also when I use this tool, I'm usually using it on the 4-hour chart or the daily time frame. So I want you guys to notice something right off the bat. These are our most retraceable levels when we're using this tool. I'm going to highlight it. The 6 to 8 and the 50%. Highlight this for you guys. Okay, there we go. So you guys can see right in between this green box is where we have the most retracement. And you guys can actually see, look to the left, structure leaves clues, that as we put a horizontal line right here on the 6 to 8 level, look at how it hit it in the past right there. 1, 2, 3 different times. So this support later became resistance. You guys can also see that as the market broke out right here, these are our bullish candles breaking out, the blue candles. And you can kind of see when we hit the 50% zone on these candles, look at how the market just kind of started consolidation. There really was no breakout until this candle right here. That's because, like I said earlier, the most retraceable levels when we use this tool are the 50% and the 6 to 8, meaning that it's sometimes hard for the market to break through these levels. You guys can see on that candle, it hit it, drop down, hit it, drop down, hit it, drop down. Actually broke through right here and hit the 6 to 8 zone, but look at the body itself. That blue body, it closed below the 50% zone, the 50% zone. And then the candle that opened after that is kind of a doji, and you can kind of see that it came and tested 382 level, and then it finally broke to the upside. We had that candle closing above the 6 to 8 zone, giving us more confirmation that this is still a valid buy market. And you guys can kind of see that red or the green line right there. That's our 20 length moving average. So look at how that 4-hour candle is kind of testing the zone right here. And the market is closed right now, but that's fine. The market's going to open up in the next couple of hours. And I think that we're possibly going to see a breakout to the upside on the 4-hour or on Euro USD in general. And what I want to do is actually go to the daily time frame and see what's going on there. I have a bunch of stuff, a bunch of files loading on my computer. Okay, perfect. So I actually caught this buy with my team on Euro USD, and I want to show you guys exactly why we caught this. So right off the bat, guys, I always use the daily time frame because it is so accurate. All these times that these candles form, a doji, a spinning top, something like that. This is actually a spinning top right here, this candle. But I want you guys to notice that that candle is basically telling us that the market's at a point of indecision and it's most likely going to reverse. So I saw that pins to the bottom mean it's going to go up. Pins to the top, that means it's going to drop. We have the pins to the top right here, drop, pins to the bottom, and it went up. So after this daily candle closed and this one opened up, you guys can kind of see that the price actually retested these lower lows, and then price started to move up. So we caught this buy. I think it was like a 20 to 50 pip trade that we caught, and it was last Friday. So last Friday was NFP. So for all of you that don't know what NFP is, it stands for non-farm payroll. That's one of the biggest news occurrences for the US dollar. So when that came out, it really wasn't positive for the US dollar. Because if we're buying Euro USD, we want the value of the euro to be greater than the US dollar. So as we're in an uptrend right now, that means that the euro is basically kicking the US dollar's butt right now. So honestly, we're probably going to see more buys this coming up week. And what I would then do is go down to the weekly time frame and see what is happening there. Yep. So alright, you guys can see, look at that same candle that formed that was on the daily chart. This week's candle is going to open up when the market opens up, and we're probably going to see a retest down to lower lows, and then it will push all the way up to these levels right here. Honestly, we could see a good buy for Euro USD this week. And this is just my analysis. I'm doing a very bland analysis. Not much is going on. I really just pulled up the fibs. And overall, what I want you guys to get from this video is how to use the Fibonacci retracement. And if you guys have any questions, concerns, comment them below or send me a message on Instagram. This tool is very accurate, guys. It will help a lot of you out. Guys, thanks for coming on this video. I'll see you guys later.